Hello, Michael Bull here with the Commercial Real Estate Show at RECON14 in Las Vegas. I'm here with Chris Marabella.
Hey,
right?
Michael, how are you doing? Are you enjoying ICSC?
I am, and we got to sing it, right? Marabella Finance.
Marabella
That's
Finance.
right. And Marabella Finance.
Stick with my Italian heritage.
That's right. And they focus on single-tenant net lease properties, right?
Right, right.
And so what do you see for volume in the net lease market right now? It seems to be a very hot property type, and how many of these purchasers are really financing?
You know, Michael, a lot of the people that are buying the net lease are getting very low returns in the bank. So there's a lot of disintermediation. People are going into net lease instead of putting their money in the bank. When you can get, 400 to 600 basis points more than you can get in the bank, that's why they're buying the Walgreens, the CVS, the Jack in the Boxes, the 7-Elevens. And a majority of the people that are buying these have a lot of tax motivation. They're involved in 1031 exchanges, so they get the additional benefit of deferring the capital gains tax. And so it's been a really hot market. A lot of the baby boomers that are retiring and they want security, they want to be able to travel. The net lease vehicle has really been the vehicle that's given them that opportunity. Yeah,
that's a great property type for lack of or low maintenance or no maintenance, no management opportunities, and I think a lot of people are interested in the sector, and there's a level of safety. Well, let's talk about positive leverage. I mean, with some of the lower cap rates, some of these real blue chip single tenant properties are creating. Can you get positive leverage and get a lower interest rate than the cap rate on the property today?
Right now, like Walgreens or CVS. They're anywhere between 4.5% to 6% on newer leases. A lot of people have been going with the shorter leases, but those are harder to finance. A loan constant for like a 30 and 10 is probably in the 6.5% to 7% range. So you have negative leverage there, meaning that the more money an investor puts down, the better their return. The more leverage, the lower their return. So a lot of people, they're coming in with 30, 40, 50% down, and that really hasn't slowed the market down. There's not much supply, although that is changing. When we had the credit crunch, there wasn't much construction preferred equity, but now that's a lot more plentiful, so you're seeing a lot more deals. So my hope is that there's going to be a lot more supply of Walgreens, CVS, Jack in the Box, Dollar General, Family Dollar, 7-Eleven, and others, as long as they keep expanding. We really need to get that stronger economy. Hopefully Yellen's doing that by lowering the rates and continuing the bond buying, but that's really crucial for the retail market. As you probably know, consumption 60% of GNP. Yeah. So it's important for retail that people are out there consuming. Yeah. And so.
Yeah, well, that's a good point. And a lot of single-tenant net lease buyers, they're really interested in the tenant more so than geography. So is your business taking you all over the country?
Pretty much. Right now, we're doing Walgreens in Alabama. We're doing a 7-year IO loan. That's it'll start to amortize over 25 years. We haven't locked the rate yet, but it's been approved. Our rate is coming in right around 4.5, 4 3/4, and that's a CMBS loan. But the nice thing with triple net, as you mentioned, the tenant takes care of the insurance, the taxes, and maintenance. And a buyer should always review the lease, make sure that there is no landlord obligations, because a lot of these leases are a little bit different. There's no set lease, but someone in California can buy a property in Oklahoma. And so you have a lot of capital heading east, because they can get slightly higher cap rates. Right. And if it's triple net and you've got a good investment grade credit, the default rate is much lower, so they can invest in a different area than where they live. And with a 1031 buyer, they only have about 45 days to identify 3 properties and close in 180 days. So the probability of finding something nationwide really increases the probability for them that they're going to get a good net lease deal, versus if they had to invest right in their backyard, the odds of getting 3 good deals goes down significantly. Yeah. really the buyers out there that are doing this, they're killing two birds with one stone. They're using this for their retirement planning, and their passive properties, so they don't have to go out and do plumbing and all this other things that you do with apartments, and they're deferring taxes.
Yeah, those are good points, and that's why that sector, the single tenant net lease sector, is so popular. And like you said, when you're looking at the leases, the devil is in the details.
Oh,
what
yes.
are some things in a lease that you look for as a lender that might cause a little concern?
You know, we're always looking at the liability and property insurance. We like to see, if it's a bond lease, there's no abatement rights. So if the store goes dark, normally the rent continues. So in that case, we really don't need loss of rents. But if it's not a bond lease, you better make sure on your accord form that you have loss of rents insurance for about 6 to 12 months, because then you'll have to go buy a companion policy that's going to cost maybe $300 to $500 a month.
That the lender's going to require.
That the lender's going to require. That's one big hole that people don't take into consideration. Again, the REA agreement's another one. If you're buying a net lease deal that's in a center, you want to look at those REA agreements and make sure there's not a storm drain or an access agreement where you're going to have to get liability insurance, even though the agent has told you it's a net lease deal. There's still landlord obligations you may be on the hook for.
Yeah.
So
that's a good point. And like you said, some of these cap rates have gotten a little low, a little compressed, and a lot of people are looking at some of the higher cap rate, higher return properties that have shorter lease terms. And do you have any financing available for these shorter lease term single tenant net lease deals?
There is financing. Our attorney Yvette Flores with Flores Mavic, who used to work here at Walgreens and McDonald's, what we do like a two-pronged strategy. We put those landlords in touch with Yvette to see if we can do a lease extension. Maybe the tenant exercise the option early for maybe 5 or 10 years or whatever that may be in the lease. That's one way, so they get a longer lease. If it's a shorter lease, then our lenders are going to kick the tire more on the real estate. They're going to look at the rent to sales. They're going to look at the comps and the sponsorship. If we're doing a $5 or $10 million loan, we want to see a net worth of that sponsor right around 1 to 2 times the loan amount and about 10% of the loan amount in liquidity. And the sponsor should have a pretty strong adjusted gross income, because what's going to happen if that tenant leaves? One, it's not triple net anymore. Right. So that landlord's going to have to start to carry the taxes, the insurance. They may have to do tenant improvements, which will run them, anywhere between $300,000 to $1 million. Leasing commissions.
Yeah.
And if they have a balloon, it's kind of the perfect storm. So that's why when we have the shorter lease, we got to know that there's a pretty good likelihood that this tenant's going to renew if the sponsorship isn't real strong. If the sponsor has a real high net worth with a lot of cash, that concern kind of goes away. Okay, so it's your risk reward. If you're going to get the higher return, it may come a little more risk. And so loans like that, you are personally guaranteeing those loans, right? Yeah,
as a borrower.
9 times out of 10, the lender will want a personal guarantee. And again, they're going to kick the tires on the real estate, to make sure, like pharmacies, the average rent to sales is about 5%. Sometimes the tenants won't give you that. If you have a percentage rent clause, then normally it's mandatory that they give you the sales, so you know what kind of percentage rent you would get. Normally you don't get percentage rent, but that's the way you get the sales. The sales, right. And we can analyze the property.
Do you have another way when you don't have the numbers on the sales from a retail tenant or single tenant like that to get an understanding of how much business they are doing at the store?
I've heard people that buy these will actually go to the store and just watch the amount of people that are parking there, going inside the store. There are outside third-party providers that somehow have a way of finding that out, that I've talked to lenders. I don't know that specific company, but they have an outside company. That's all they do is track. If it's a CMBS loan, there's another way I believe that you can track that through Bloomberg. But normally the way we've been doing it is just looking at that percentage rent. Okay. And normally for like Walgreens or CVS, pharmacies, what I've heard, the average is right around 5%, give or take. is a pretty decent store.
Okay. Well, Chris, thanks for joining us today. I hope you have a great Recon 14.
Michael, it's been a real pleasure, meeting with you, doing this interview, and thanks again.
All right, thanks. Michael Bull for the Commercial Real Estate Show, Recon 14.
Thanks again.
The Commercial Real Estate Show is brought to you by Atlanta Office Liquidators, new and used furniture liquidators, France Media, publications and conferences, Florida International University, Real Crowd, and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.